Well, look, it's kind of it's a pretty compact schedule here. To your point, he just arrived at the White House just in the past couple of moments, actually, and there will be this sit-down meeting in the Oval Office. That's the part we won't be in the room for. Reporters will get a couple of moments to get some pictures and video. They'll probably make a couple of quick statements. That's going to be forthcoming shortly. Then there's a news conference, a formal news conference with the two of them at the White House before Zelensky heads to Capitol Hill. That speech tonight, it's interesting. It'll happen around 7:30. It's historic, obviously. This is the first time, to your point, he's left his country in 300 days of war. And he's going to be speaking at a very important time here on the eve of an important vote on a budget that includes $45 billion for Ukraine. That money will not last the whole year, and he knows that there's a Republican majority coming in the House that is not terribly favorable to the idea of giving a lot more money to Ukraine. Kevin McCarthy, who will likely be the Speaker, says no more blank checks. Marjorie Taylor Greene and Matt Gaetz, members of the rank and file, conservative Republicans, say not one more dollar. So this is an important, not just saying thank you to Congress, but also coming to ask for more and making the case for why he needs it.
Joe, is there any sense that he'll get a chance to sort of go shake hands with some of these Republicans that are against more spending and try to make his case to them one-on-one, or does it all boil down to this speech tonight?
It's a great question. He's not going to have a lot of time, but I would say it's likely that he will end up being eye-to-eye and potentially shaking hands with, having some brief words with at least members of the leadership. And Kevin McCarthy is the Republican House leader now, even if he's not Speaker yet. So, you know, it'll likely be a room that includes Nancy Pelosi, Chuck Schumer, Mitch McConnell, who, by the way, is a Republican leader who made the case for Ukraine funding. The Senate is kind of its own world compared to the House on this right now. And Kevin McCarthy will likely be there as well. There could be others, Steve Scalise included. And so, yes, I suspect that before that speech, he's going to sit down and have a brief chat with them. But the moment is going to be in that room because of the history. It's not often you have joint sessions of Congress. Think of this as a State of the Union. The cabinet has been invited. You know, the chairman of the Joint Chiefs. Right. This is going to be the moment when he's in the Speaker's rostrum wearing that green sweater. By the way, he did not show up in a suit today, making the case to the people at that hour at 7:30, just before they vote, before they head home for Christmas. It's poignant.
All right, Joe, you're going to be a busy man. That is Bloomberg Sound On host Joe Matthew. Let's get a check on the latest world and national news now with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. And I should mention you were just talking about Ukrainian leader Vladimir Zelensky's visit to the White House and later to Congress. And we will have live coverage of that press conference and then a special edition of Balance of Power starting at 7:30 Eastern on Bloomberg Radio and Television when Zelensky makes that historic address to Congress. And you know, as Ukraine's war against Russia intensifies, we are learning more about the U.S. discussions with Russia over securing the freedom of American Paul Whelan as well. And we get details on that part of the story from Bloomberg's Amy Morris in Washington.
National Security Council Communications Director John Kirby says the U.S. remains engaged in active discussions with Russia over bringing the former Marine home. Whelan has been held in Russia for the past 4 years on espionage charges, which he vehemently denies. He was sentenced to 16 years in prison. Kirby would not release details about the talks. The Biden administration came under criticism for trading convicted arms dealer Victor Bout for WNBA star Brittany Griner without also securing Whelan's release. In Washington, I'm Amy Morris, Bloomberg Radio.
Thank you, Amy. And the other big story we're tracking for you, the U.S. bracing for a massive winter storm, a whole bunch of them, including here on the East Coast, also in Chicago. Rich Giudice, Executive Director of Chicago's Office of Emergency Management and Communications.
We encourage you to check on your neighbors, family members, pets, and friends, particularly those who are elderly or have disabilities.
Also today, we're tracking for you a U.S. Attorney for the Southern District of New York holding a press conference this afternoon on FTX co-founder Sam Bankman-Fried as his extradition process unfolds. And the U.S. just announcing it is releasing its reserves of Tamiflu because of the shortages and the tough flu season. Global News, 24 hours a day. On air and on Bloomberg Quick Take. I'm Denise Pellegrini. This is Bloomberg.
All right, thank you so much, Denise. Let's go now to the White House where President Biden and Ukrainian President Volodymyr Zelensky are meeting.
First of all, I really, all my appreciation from my heart, from the heart of Ukrainians, all Ukrainians, from our nation, strong nations, all the appreciation to you, first of all, Mr. President, for your big support and leadership, because Europe, many countries helped us and are helping now, because the war is not over. It's a bit, but anyway, but that is your leadership. Thank you, first of all. Thank you so much, Mr. President. Of course, thanks my partisan support, thanks Congress, and thanks from our just ordinary people to your ordinary people, Americans. I really appreciate. I think it's very difficult to understand what does it mean when we say appreciate, but you really have to feel it. And thank you so much. Great honor to be here. And yesterday I was on Donbass in Bakhmut. That is the place on the east of our country. You know it, all the details. We had so many phone calls and spoke detailedly about it. And I want to give you something. One guy, he's really a real hero, real captain, and he asked me to pass his award. And he asked me to pass his award to President Biden. You will understand, he is the captain of HIMARS battery. Yes, he's very brave, and he said, give it to very brave president. And I want to give you that is the cross for military merit. That is one.
Oh, God love you.
Yes, that is from him, and I have the list. He wrote the list. Yes, I didn't read, Mr. President. I can't read. It's not it's in Ukrainian language, but here the translation. It's from him.
And his name is, I have his name, I could
Yes,
contact him?
yes, yes.
Pablo.
Pavlo, tak.
Well, undeserved, but much appreciated. Thank you.
Thank you.
Thank you.
He said that many his brothers, this system saved. So thank you very much.
Well, we have a tradition here, and I will give it to him. My son, who fought in Iraq, they have what they call a command coin. You've seen those coins we have in the battlefield. I will make sure that he gets one of those.
Great. Give me, I will give.
Well, thank you.
Thank you so much.
Appreciate it. What a great honor.
Thank
Great
you.
honor. Well, thank you, press. Appreciate it.
All right, that was President Joe Biden meeting with Ukrainian President Volodymyr Zelensky in the Oval Office. Zelensky did thank President Biden for hosting him and said, the war is not over. It's going to be a busy day for the Ukrainian president in his first trip outside of Ukraine, again, since Russia invaded Ukraine on February 24th. That was over 300 days ago. And Mike, as we think about today's schedule, again, it's going to be a compact one for President Zelensky. At 4:30 today, he's expected to hold a joint news conference with President Joe Biden, and later today expected to address the U.S. Congress.
Yeah, Katie, just to set the scene a little bit for listeners who weren't able to see the video that we saw, President Zelensky is sitting there in the Oval Office in sort of green military sweater and pants. So really visually, I think he's presenting himself as still this military commander. It's not your typical diplomatic state visit where everyone's in a suit or their best and sort of niceties and fineries. He's really presenting this image of a president at war, which he still is. I think that sends a pretty loud message to everyone who's watching it.
A president still at war, at a critical stage in the war, again, making his first trip to campaign for more aid in the U.S. We're going to be following that story closely over the next 3 hours. Bloomberg Business Week is brought to you by the Jewish Communal Fund. JCF's donor-advised fund is the smart, tax-efficient way to manage your philanthropy. Open a JCF fund now to lock in a 2022 tax deduction. Visit jcfny.org org. And we were just talking about President Biden's meeting with President Zelensky. Later today, Attorney General Merrick Garland will join a meeting with the two, according to Bloomberg reporting. That's because the DOJ has played a key role in enforcing some of the sanctions against Russia, which leads nicely to one of the stories on the terminal today. It's in the Business Week magazine, the headline of which is Russia and Iran are building a trade route that defies those sanctions. Let's talk about it with Bloomberg Businessweek editor Joel Weber and Businessweek Global Economics editor Christina Lindblad. They join us both now. And Joel, it's a big, important story again as we watch what's happening in Washington, D.C. with the Ukrainian president here on U.S. soil.
Yeah, it seems like a pretty well-timed story and very much adjacent to sort of the bigger geopolitical tensions. And what this story digs into was honestly like just you got to read this thing either on your phone or in the magazine or online so that you can see what this trade corridor is starting to look like. And really what Russia and Iran are trying to do here is find a synergistic relationship that can actually be behind the lines so that things like ports that rely on other partners can't be affected by sanctions. And so they've really come up with there's an existing infrastructure, but then they have very ambitious plans to expand what that looks like. Christina, how ambitious and what do they need to accomplish?
Well, they are planning to invest about $25 billion, and that is in widening and upgrading like you said, some parts of existing infrastructure, like the Sea of Azov, which is the distinction of being the shallowest sea in the world, that needs to be dredged in parts. There's a canal linking the Don and the Volga rivers, also very narrow in parts and has sort of traffic jams there. We're seeing Iranian ships beginning to move through these waterways. So what they're creating basically is this internal, inland corridor rather, which where it's more difficult to scrutinize what kind of cargo is going through.
And where does the trade currently begin, and where's the ideal end point currently, and then also in their plans?
Right. So right now, this Sea of Azov, which is right north of the Black Sea, most people don't even, I think, probably didn't do it in geography in high school. And then the terminus would be on the Indian Ocean, because India is a key part of also, while not making huge investments compared to the other partners, it is part of this corridor, because already we're seeing, for example, there was a shipment of Russian grain that transited through Iran on its way to India this year.
And how busy is it currently?
We analyzed, I'm sorry about the noise. We analyzed some data on ship movements, and we were able to track a couple of dozen ships from Iran and Russia that are already using the waterway. Some of those vessels are sanctioned, but there is incomplete data. But that's what we were able to establish.
Christina, when I think of both Iran and Russia and their trade with the rest of the world, all I can think about is oil and energy. So I'm curious, what will these two nations be trading back and forth? I assume it's not a big oil relationship. What are some of the items that'll be going back and forth?
Well, you're right. Grain and oil products is the foundation of the existing trade, but they've signed a bunch of deals this year, and they're trying to expand into like polymers, medical supply, auto parts. So we saw, for example, already that trade in the first 8 months of the year doubled between Russia and Iran. And there are forecasts from Russian sources saying it could go to as high as $40 billion a year if the two countries wrap up a free trade agreement.
And so, Christina, if the aim here is, or one of the aims is to build sort of a sanctions-proof trade route, what has the response been from around the world? What has the U.S., for example, had to say about this?
Well, the U.S. envoys, U.S. officials rather, are already very concerned that some of the trade going through right now is arms, from Iran traveling to Russia. And they're basically putting the world on notice that, they want to crack down on that kind of commerce, and also that other countries that sort of aid in this effort, in this larger effort, will also be sanctioned. So that could be a concern for countries like India if they want to participate in this corridor.
Okay, so that speaks to how the U.S. and its allies could actually try and pinch this. What options do they have to exert influence and try and dial down what's possible here?
To exert influence with
allies to make sure that the corridor is trafficked not as much as the Iranians and Russians would like.
Well, I mean, like I said, if they would sanction, for example, Indian buyers of Russian wheat that was going through the corridor, they haven't spoken exactly with that kind of detail, but they basically said, if we find that countries are trading with these nations, they will be target of sanctions too. I mean, the difficulty is that it's much harder to track, cargoes going through this inland corridor than it would be in the open sea. For one thing, the vessels are generally smaller because these waters aren't as deep, so there's going to be more traffic to get the same amount of goods across.
Well, I was going to ask that about Christina, about the ships involved in this. Presumably these are just Iranian and Russian ships. Are they sort of cutting out the global shipping industry more or less?
From what we've been able to gather, yes, that's mostly what they are, because ships need, for example, Russia has been working to give Iranian ships right of passage through its rivers and canals. So Russia controls some of these waterways, so not any country can go through.
And talk about India's role here. Sorry to cut you off, Joel, but when we think about this route that's being built between Russia and Iran, how does India factor in?
Well, India's made an investment in an Iranian port, but it predates. It's been, the work there has been lagging for many years. So it wasn't done, I don't think, with any kind of larger vision of what was going to happen in terms of how these two countries were going to try to, turn so much toward, Russia and Iran towards each other and try to accelerate plans for building this route. But generally, there has been an effort underway for at least a decade to sort of knit together the countries in Eurasia closer together. And so India was going to be part of that in some form.
I wonder, go ahead. It speaks to the evolution of the BRIC relationships too, right?
Right.
And like,
if
you can reach Asia a little bit here, maybe even South Africa through these terminus, you start to actually see that this could be. I mean, this is kind of the U.S. nightmare, I think, actually. Like, if they can actually stitch together a trade corridor that's sort of behind enemy lines, like, you might not be able to touch it that effectively, right?
That's right. I mean, it also shows, I think one of the things we've been tracking all year is just to look at how supply lines, supply chains are changing as a result of geopolitics, So we've seen a bit through, nearshoring and so-called friendshoring, but this to me actually was a story that I hadn't heard that much about, so I was very interested.
All right, it's a great story from Bloomberg Businessweek that is Russia and Iran are building a trade route that defies sanctions. Those nations investing upwards of $20 billion to ease the passage of goods along those waterways and those railways. A very timely conversation, again, as Ukrainian President Volodymyr Zelensky visits U.S. soil for the first time, first trip outside the country since that war started over 300 days ago. Thank you to Bloomberg Businessweek editor Joel Weber and Businessweek Global Economics editor Christina Lindblad. Well, we have much more Bloomberg Businessweek coming up in the next 2 hours. This is Bloomberg Businessweek on Bloomberg Radio.
It is now 2:53 on Wall Street. I'm Doug Krisner at the Bloomberg World Headquarters newsroom with today's company headlines. Carnival Corporation reported a narrower than expected adjusted quarterly loss, and at the same time, the cruise operator said that booking momentum has continued into the month of December. Alphabet's YouTube unit is said to be nearing a multi-year deal for the rights to stream the NFL Sunday Ticket. Now, the Sunday Ticket is a subscription package. It allows fans to watch afternoon games that aren't in their local TV markets. Tesla shares are trading higher. This is after Elon Musk said he would step down as CEO of Twitter once a successor is identified. I think it's fair to say that Tesla shareholders have been a bit concerned about Musk becoming distracted by running Twitter. Justin Bieber is reportedly close to a deal to sell his music rights to the Blackstone-backed Hypnosis Songs Capital Fund. The Wall Street Journal saying this transaction is valued at around $200 million. And the theme park operator Six Flags Entertainment met with an activist investor advocating for a sale or a separation of the company's real estate holdings. However, Six Flags is saying its own plan is working. And Oppenheimer has named its top cloud and communication stocks for 2023. That list includes Microsoft, T-Mobile, and Verizon. And the World Trade Organization says the U.S. violated international trade rules when it required Hong Kong products to be labeled Made in China. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, let's get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. And as we've been talking about, Ukrainian leader Vladimir Zelensky at the White House this hour, making that surprise visit, visiting with President Biden this hour. We're tracking all the developments here, including his address to Congress tonight. And Melinda Herring is deputy director of the Atlantic Council's Eurasia Center, and she tells us it is a holiday season visit, but Zelensky is hoping to get gifts, not give them.
In order to get as many weapons as possible, you have to appeal to Congress. So, yes, he's going to meet with President Biden. He's going to thank him. But President Biden and the National Security Advisor are unwilling to send some of the heavy weapon systems that Ukraine has begged for months. But Congress, feels differently. So I think Congress is really his audience.
And Herrig speaking there on Balance of Power with David Weston. And we will have live special coverage and a special edition of Balance of Power tonight with live team coverage 7:30 Eastern as Zelensky addresses Congress in that historic moment. Meantime, a big omnibus spending bill also making its way through Congress. There is funding for Ukraine in that. It also includes some important provisions for mental health and COVID here in the United States. More on that part of the story from Bloomberg's Amy Morris in Washington.
The package focuses on suicide prevention, addiction treatment, mental health, and the COVID pandemic. In all, nearly $210 billion is included in the fiscal 2023 Labor HHS Education Appropriations Bill. That's a 7.1% increase over the 2022 level. Medical providers were also appreciative that the proposed spending bill includes a 2-year extension of emergency Medicare telehealth provisions put in place during the COVID public health emergency. In Washington, I'm Amy Morris, Bloomberg Radio.
All right, thank you, Amy. U.S. Attorney holding a press conference on FTX co-founder Sam Bankman-Fried this afternoon. That's Manhattan Southern DA Damian Williams. And some good news if you've been trying to get your hands on Tamiflu for influenza, especially for kids. Some pharmacies, guys, in Manhattan have been totally out over the weekend, leaving parents scrambling. But now the U.S. announcing it is releasing its reserves of Tamiflu because of the shortages and the tough flu season. Global News, 24 hours a day. I'm Denise Pellegrini. This is Bloomberg. Mike and Katie, back over to you guys.
All right, thank you so much, Denise Pellegrini. Bloomberg Business Week is brought to you by Innovation Refunds. Are you looking for ways to grow your business? Get back the money that you may be eligible to receive through the Employee Retention Credit. Sign up now before it's too late. See if your business qualifies for ERC assistance at getrefunds.com. Well, Mike, I don't need to tell you that it has been a brutal year for fixed income, for bond investors overall, but Bloomberg News crunched the numbers, and this is pretty amazing. Of the 198 bond funds in the U.S. that actively manage at least $1 billion, There's only 2 that have managed to record a gain this year.
Yeah, pretty. I mean, I guess not too surprising when you think of what carnage there's been in the bond market this year. Even the TIPS index, the inflation-protected securities, you'd think they'd have a good year, being inflation-protected and all, but that index is down as well. But the T. Rowe Price Dynamic Global Bond Fund and the J.P. Morgan Strategic Income Opportunities Fund, the only 2 that have managed to record a gain this year. How'd they do it? Do you know how they did it?
Tell me.
Well, at T. Rowe, they used derivatives that made money and protected the portfolio as rates rose. J.P. Morgan, they unloaded risky bonds and plowed the proceeds into cash. So you really had to, I mean, if you're a long-only bond fund this year especially, I mean, what were you going to do? There's very few ways to actually have a positive return this year. And
I think you just roll over and show your belly and accept that it's going to be a tough year, but we'll see. Both of these managers see evidence as cooling inflation as a sign the Fed will begin looking for opportunities to lower rates. They say that's foolish. We'll find out. But in any case, coming up, we're going to go cross-platform with our Bloomberg television colleagues for our 3 p.m. simulcast. Stay tuned.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close with 60 minutes left in the trading session. I'm Kaylee Lyons alongside Sonali Bostic, and we are joined now by our colleagues Katie Greifeld and Mark Regan. We welcome together our full Bloomberg audiences
we
across
are looking
TV,
at a big
radio,
rally somehow.
and YouTube.
All the action in the stock market, not too much on the bond side.
And Katie
yields
is also
pretty much
talking.
unchanged. Oh, did I talk too soon?
You did, but that was good. Santa Claus rally is finally
excited
come to
be
town.
Here. I'm sorry, guys.
Is this it, Mike? Is this the Santa Claus rally?
Well, this would be about the time of the year when you'd expect it, all the way through to the first couple days of the new year. So, you know, call it what you will, window dressing by portfolio managers at the end of the year. I don't know what you can put in your window to make your fund look good this year, but whatever it is a phenomenon that happens more times than not. I think like 80-something% of the time we do see the Santa Claus rally. So who knows, but this sure looks like it.
All right, Mike Regan with the statistics. So let's take a look at what exactly the rally is looking like today. The S&P 500 right now, not quite at session highs, but still this is a pretty healthy gain, up about 1.5%. And the gains are relatively consistent across the major averages. You also have the Dow up roughly 1.5%, 500 or so points. The NASDAQ composite is higher by 1.5% as well, and the small caps gaining by about that much. It is interesting to see equities moving so in tandem. Basically, everything is higher, Sonali.
Yeah, a lot is higher. If you take a look at the sectors, we are looking at every major sector in the green. That's a Santa Claus rally right there. You have energy leading the stocks higher at 2% gains, industrials 1.7%. Consumer staples are the least of the pack when you're looking at gains, but it's still 0.7% higher. Let's talk about movers, individual movers here, because we do have some serious movers. Nike, really strong results there. You're looking at it, gain in the stock market to the tune of 13%. FedEx as well. There's not just earnings beating estimates there, 4.4% higher on the day as it announced more cost-cutting measures. The biggest decliner is actually Host Hotels and Resorts. This is in the S&P 500. This is because another hotel-focused REIT cut its funds flow forecast, and you are seeing that industry largely fall today. But again, it's not enough to take away from the Santa Claus rally.
All right, so there's actually a lot going on in equity land today, kind of a reversal from the past couple of days where it all seemed to be centered in the bond market. But I want to bring it back to the bond market because that pile of negative yielding debt in the world has gotten a whole lot smaller. It's actually now less than $700 billion worth. That's down from a peak of $18.4 trillion reached 2 years ago. It has shrunken, of course, further in the last 2 days because of the Bank of Japan tweaking, adjusting yield curve control, if you will. So Japan's 2-year yield briefly climbed into positive territory overnight for the first time since 2015. So we're not quite there yet, Katie, but we're getting closer to the end of negative rates.
Closer to the end of negative rates. And the reason why you're seeing that pile of debt shrinking so much was because extremely high inflation all around the world really fueled a skyrocket in interest rates. We heard from Greg Peters, co-CIO at PGIM Fixed Income, earlier on Bloomberg Surveillance, talking about the trajectory of inflation into next year.
The lesson of 2022 was stagflation, bad for all financial assets. Even commodities started to catch the knife for a little bit here towards the end of the year. So I think as we move off the stagflation narrative, I think it bodes much more favorably. If we're wrong around that, and inflation is incredibly difficult to forecast, of course, but it does seem like all indicators point to lower inflation in 2023. I think the tail risk that we were experiencing in 2022 gets chopped off in 23, and I think that matters a lot.
So guys, that's a pretty big if. If we're wrong on inflation, and inflation does move higher at the same time that you see employment as forecasted by the Fed, unemployment moving higher as well, Mike, I don't know, that seems like a recipe for more stagflation.
Yeah, absolutely, Katie. But I would point out, you mentioned that the bond market was pretty quiet today, which is true. But we are seeing a decent little move in the 2-year yield, down about 4 basis points. That brings it down about 50 basis points from its high in early November. So obviously a one to watch for its sort of policy, Fed policy implications, and kind of what the market might be thinking as far as inflation and how that feeds into Fed policy. So 50 basis point drop in the 2-year over a little more than a month is, nothing to sneeze at, Sonali.
It's interesting too. You see that drop in the 2-year, but you're seeing that bid come in on the short end, but not in the long end. You're looking at the 10-year still floating at around 368, where it was just about yesterday as well. And that stagflation thought that is still looming underneath the markets. This idea next year that next year is going to be a bond markets investor, well, that's pretty damning, right, for bonds. So there's a lot of conflicting signals here when you're thinking about that excitement about a different asset class to get into.
And ultimately what it all comes down to is the Federal Reserve, right? That is what is driving everything. And I look at the data we got today. You are seeing, Katie, the continued softness in the housing market. We already are seeing the impact of the Fed's higher rates showing up there. Then you look at consumer confidence, which surprised to the upside. And within that data, they're feeling really good about the labor market. I can't imagine that makes the Fed feel really good in return.
Exactly. Not that the Fed is rooting for the labor market to crack, but when you think about what that means, what a strong labor market means, that means that the consumer is still resilient. A resilient consumer means that they're still buying, and if you're trying to bring prices down to fight inflation, it all feeds through.
Yeah, and if you really want to read on the consumer today, how about these Nike shares poised for the biggest gain in more than a year? So signs in the latest earnings and outlook from Nike that, the consumer is hanging in there despite all these headlines and all this sort of concern about what's coming next year.
Yeah, it's so interesting to look at Nike and FedEx as well, because you look at FedEx's results, volumes were actually down. The reason why they beat is because they've raised prices, inflationary impulse there, and they're cutting costs. So the demand picture is actually not looking great. They are still talking about a weak demand environment. It's about what companies then do in response to that to try and offset it. And the question really, Sonali, as we look ahead to next year is how long are they going to be able to continue to do that? Or are we looking at a really serious earnings decline?
They put the two bears on set. But look at that chart that you just saw over there too. We talked to Dana Peterson over at the conference board, and the point she was making, that lag, that separation between a present reading here of consumer expectations and the expectations, that blue line, that's a problem still. And until that converges more, I don't think you can sleep that easy.
All right, guys, a lot of big questions. I have to say, we got to leave it for now. We're going to be back, though, in less than an hour at 4 p.m. live on TV, radio, and YouTube, and Bloomberg Quick Take, all these different platforms. That's for our Beyond the Bell coverage, where we're going to walk you through today's market close. President Vladimir Zelensky's visit to the White House. We're going to do that now with Angela Stent. She is senior fellow at the Brookings Institute, joining us now. And Angela, it's great to have you with us. As we've walked through a few different times, this is President Zelensky's first trip outside of Ukraine in 300 days since the invasion. Walk us through, I guess, sort of the signal there. Put it into context how important this trip is.
Well, this is indeed a historic trip. He hasn't left the country. He didn't go to the G20. He's gone to NOAA. He's done everything by Zoom. But I think he realizes it's very important to come to the United States. This is a crucial period in this ongoing war. The Russians aren't doing well. On the battlefield, the Ukrainians are doing much better, but they're also being pummeled every day by Russian attacks and losing electricity and water and heat and things like that. So he's coming to the United States to thank the United States for everything it's done. Without our weapons and our financial support, Ukraine probably wouldn't be where it is now. To, I think, make sure when he talks to the Congress, certainly, that they understand that Ukraine still needs their help because there is doubt about what's going to happen when the Republicans take over the House. And I'm sure he also wants to talk to the president. President Biden wants to talk to him about how does this go from here? What does he envisage is going to happen in this war? So a lot to talk about and symbolically very important.
You know, Angela, I'm thinking about Vladimir Putin in Moscow or wherever he is right now, watching this meeting on TV. Obviously, I would have to assume this doesn't play well in Moscow. Does this risk sort of a more aggressive retaliation type of thing from Vladimir Putin to watch this meeting take place?
Well, certainly his press secretary this morning said, the more assistance that the U.S. gives, the more the risk of escalation there is. We've been so worried about escalation, and what we've seen the Russians do clearly is with this indiscriminate bombing of civilian targets. But short of using a tactical nuclear weapon, which I think the likelihood of that is not very great. The Russians want us to believe that they're going to escalate. They want to intimidate the Ukrainians and the West into not doing more. But I'm not sure that this really does risk very much more because, as I said, the Russians are not doing well on the battlefield. That yes, they can continue to bomb these civilian targets, but they've been doing that for the past few weeks anyway.
Well, Angela, talk to us about that a little bit more, sort of the Russian perspective, specifically the Putin expectation. When he started this invasion 300 days ago, did he have any idea, or I don't know, do you think that he thought we would be talking about this 300 days later?
Certainly not. He thought that they'd be able to take Kiev in 3 days and conquer the whole country. So I'm sure he had, in his wildest dreams, didn't think that the war would be going on because they totally underestimated the Ukrainians' ability and will to fight back, and they underestimated Western solidarity. They didn't think the U.S. Would back, and its European allies would back Ukraine the way it has. So I think from their perspective, this was unexpected. The Russians now portray this war as a proxy war between Russia and the West. They see this as a war between them and primarily the United States. That's not how we see it. It's a war between Russia and Ukraine, and we're helping support the Ukrainians. But this is really feeding in to the narrative that Putin is telling the Russian public that this is really the U.S. is guilty here.
You know, Angela, I know President Zelensky is in D.C. mainly to get more weapons in the fight against Russia. But boy, as I think of that cold winter approaching and really already here in Ukraine, talk to us a little bit about what that winter is going to look like for Ukraine this year. And is there anything the U.S. can do to help them on that front?
Well, I mean, it's going to be a very cold, dark winter, whatever the temperatures are. I mean, there are people who've already been existing without heat, without electricity, and without running water in cities and in rural areas, too. But the more that the Russians bomb them, the more that strengthens the will of the Ukrainian people to resist Russia. But it's obviously very, very difficult to live under those circumstances. So what the U.S. can do is, I think we've given them some assistance in trying to repair their electricity grid and things like that. But by providing them with weapons, and we now have announced that we will give them the Patriot missile, this is a defensive system to shoot back the Russian missiles, the more that we can provide them with the weaponry to deflect Russian attacks, then the less they will, in fact, lose their electricity, and the less their infrastructure will be damaged by the Russians. So it takes a few weeks to train people to use these systems, but hopefully in a few weeks' time, that will help.
Well, you hit on what I've been wondering. So we're providing support in the form of weapons, but as you mentioned, that requires training as well. I mean, is the U.S. providing that training?
Yes, it is. We'll be training the Ukrainians, I think, probably at our Air Force base in Germany, and that's where they'll receive the training.
Angela, how do you see this all ending? I mean, is there any world in which Vladimir Putin just concedes defeat and walks out of Ukraine? I assume not, but how does this resolve itself?
Well, it's really unclear. This is a war that could go on for a long time. The Russians are digging their heels in. Putin's view is the longer this war goes on, the more likely it is that either the Ukrainian people will say, we've had enough of this, we can't live like this anymore, let's sit down at the table and make concessions. And the same with the Europeans, who are also suffering from high gasoline prices and problems also with the supply of electricity and things like that, as a result of the sanctions, by the way, that we've imposed on Russia. And so he's hoping that the Europeans will say, maybe we have to rethink what we're doing. And the same in the United States. That's why President Zelensky is going to the Congress. You know, you have a lot of skeptics among the Republican Party who are questioning why the U.S. should continue supporting Ukraine like that. So that's part of Putin's game plan, is to wait for the Western resolve to collapse and then force the Ukrainians to make these concessions. It doesn't look likely at the moment that the Ukrainians are going to do this. Putin will never accept defeat, but in theory, he could certainly present this as some kind of a gain for Russia if Russia's taken a little bit more territory, but he doesn't seem prepared to do that at the moment.
And Angela, you hit on an important point, this Republican opposition when you're looking at what's happening on U.S. shores. And of course, President Zelensky is set to address Congress later today. And we've been having this conversation. You think about Matt Gaetz, you think about Marjorie Taylor Greene, their opposition to the fact that the U.S. is providing any aid at all to Ukraine. Is there anything, in your view, that the president of Ukraine could say tonight in front of Congress that would shift sentiment?
Well, I'm sure that he's not going to be able to change the minds of people like Marjorie Taylor Greene. But I think apparently he is going to meet then after the speech separately with Republican and Democratic leadership. And I think what he's trying to do probably is to shore up people like Mitch McConnell, Senator Mitch McConnell, people like that, who in fact are still very much in favor of supporting Ukraine. We shouldn't forget that until now, Ukraine has been one of the few issues on which there's been bipartisan agreement in Congress to support it. So I think those people will be his targets. I read somewhere that he might be meeting with Senator Rand Paul. Now, Rand Paul is an extreme skeptic on this, so I have no idea whether that would change his mind.
Angela, just so our listeners have a sense of why you know so much about this topic, talk to us about your book about Vladimir Putin for a little bit.
Right. So I published a book called Putin's World. And in that book, I look at Russia's relations both, and the subtitle is Russia Against the West and With the Rest. And in that book, I certainly look at why Russia's relations with the West have deteriorated so much in the last few years under Putin, but why the rest of the world, much of the rest of the world, China, India, the other BRICS countries, much of the Middle East, Africa, and Latin America, all of those countries, right, have not condemned Russia for its invasion of Ukraine, have not imposed sanctions on it, because Putin has very carefully cultivated relations with these non-Western countries, and that's really paying off for him. And that's why, you know, when we look at this, President Biden said at the beginning of the war, Russia will be a pariah. It's a pariah in the West, but it's not a pariah in the rest of the world.
Angela, really appreciate your time. That is Angela Stent. She is senior fellow at the Brookings Institution. And as she said, she's the author of Putin's World, Russia Against the West and With the Rest. Really appreciate your time as we watch President Vladimir Zelensky's trip to the U.S. This is Bloomberg Business Week.
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are making our way toward the closing bell. The equity market off session highs right now. Nonetheless, we have quite the rally underway, given some better than expected earnings, not only from FedEx, but Nike as well. Let's get you the latest on the price action. Bill Maloney is at the Bloomberg Macro Squawk Desk. Hey, Bill.
And good afternoon, Doug. That's right. U.S. stocks with a bid from the start today, with the Dow currently up 487 points. S&P's gained 53, and NASDAQ is trading higher by 156. The U.S. 10-year yield at 3.68%. Gold is down 4. Oil is climbing. and Bitcoin is down by 0.7%. Among the main 11 S&P sectors, all were trading in the green, led by gains in energy and the industrials. And leaders to the upside in the Dow, Nike, Boeing, and Caterpillar, while Walgreens fell 2.2% and led to the downside. Also after earnings, Carnival rose 5.6%, and wrapping things up, Micron reports after the bell. Live on the First to Break News Desk, I'm Bill Maloney. Doug?
Thanks, Bill. To get live audio updates right on the Bloomberg Terminal, SQUA, then the green Go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, thank you so much, Doug Krisner. Well, one of the defining features of the economy in 2022, other than super hot inflation, has been a super strong labor market. The unemployment rate came in at 3.7% in November. Let's talk about what the next year holds with Julia Pollack. She is chief economist over at ZipRecruiter. She joins us now on Zoom from Los Angeles. Julia, it's great to get some time with you as we wrap up 2022. Let's talk about the labor market in 2023. Do we get above 4% inflation, or are we going to stay resilient here?
Unemployment, you mean?
Unemployment. It's been a long year.
The Fed is predicting 4.6% unemployment in 2023 and 2024. But it's somewhat hard to see how that will happen given the strength of the U.S. consumer. Right now, we're still seeing consumers with plenty of runway left, with very low debt service payments as a share of disposable income, and with very low delinquencies. And here's the most important thing that's going to happen in the next year. Workers are going to see a real wage increase, and that's because inflation is coming down more quickly than wage growth. And so actually, their purchasing power could expand. And I think that will fuel strong, sustained, robust employment growth, despite some of the predictions.
Mm-hmm. Well, Julia, clearly I have inflation on my mind. So let's talk about that a little bit, sort of the link between inflation and what we're seeing in the labor market. Wrap those two together. What does that relationship look like in this moment? Does one depend on the other?
So the imbalances in the labor market are a key contributing factor to inflation, and they are a reason that we have seen inflation spread across the goods in the CPI basket, move out of sort of energy and food and areas like that where supply chain issues were to blame initially, and into core services now. But what we know is that the Fed's actions are taking effect. We can see inflation coming down now, and real-time sort of market rents, for example, real-time private sector data suggests that there's more cooling ahead. We also know that when inflation comes down, it doesn't mean that wage growth comes down right away either. There have actually been pretty long periods in history of real wage growth because wages are much stickier than prices of goods and services. And so what we could see this year is that after seeing their purchasing power erode in 2021 and 2022, workers could now actually finally get a real wage increase, as they have been doing over the past 5 months.
Yeah, Julia, I'm wondering how you think we got to this situation we're in now with the imbalances you're talking about. The JOLTS job opening survey still shows something like 10 million job openings in the U.S., way off the charts compared to pre-COVID. Why is the job market still so hot, in your opinion?
Well, initially it was because employers rushed back into the market and demand returned much more quickly than labor supply. Many of the people who left the labor market initially, who were displaced, who were older workers, just felt it wasn't worth the effort to reskill and come back. And so we've seen many more people retire than would have been the case without the pandemic. We also are kind of returning to the sort of pre-pandemic downward trend in labor force participation that's driven by an aging population and a retiring set of boomers now. And then finally, immigration fell off a cliff. Embassies and consulates were closed around the world, and immigration had been falling even before the pandemic due to the Trump administration's policies. And so the shortfall is anywhere between sort of 1.5 and 2 million immigrants who would otherwise have been working in the United States now. So the long-term prospects of the U.S. labor market and its size are not that great right now unless we start making more babies or allowing more immigrants. And,
Get those
you know,
boomers back to work. It's always the boomers' fault, Katie. You ever notice that?
It's a nice
Right.
change from just blaming the millennials.
Yeah, I don't know. Let's go back to blaming the millennials. I'm closer to the boomer end than the millennial end. Making me uncomfortable with all this boomer.
But even even among working age people, even among millennials, we have this very worrying trend of working age men leaving the labor force. The decline in labor force participation among prime age men, I think, is perhaps even more concerning, and that's tied to things like this, dramatic increase in drug use and drug overdoses and opioids and fentanyl and these very, very dangerous things. So, hopefully this is a year where policymakers study the reasons underlying relatively sluggish low participation in the labor force and come up with some serious solutions.
Yeah, no, that's definitely been one of the mysteries, just tracking that participation rate. But sort of to Mike's previous question, why has the labor market been so resilient? And that question becomes even more pressing when you think about some of the headlines that we've been getting over the past couple of months when you watch what's happening in the crypto industry, which it's whole idiosyncratic story, but you've seen a lot of jobs lost there. Then you think about the tech sector and some of these big tech giants either freezing hiring or laying people off. You haven't seen it work its way into the data. And is that because there's certain sectors of the economy, of the jobs market that are still hiring and then some, or how does that sort of wash out?
So when we talk about tech layoffs, we're talking about tens of thousands of workers. But in a normal month, 2 million workers in the US economy are laid off or fired, typically. And since the pandemic, that has been way down to about 1.3, 1.4 million. And so we have far fewer layoffs and terminations happening in the economy right now, overall, in the aggregate. And that's why those tech layoffs are hardly even showing up. Also, when tech workers are laid off, their reemployment prospects are pretty strong. I mean, this is the cream of the crop. These are the most in-demand workers in the economy. And so many of them are finding reemployment remarkably quickly. They're getting calls from recruiters before they even sign that severance package. So that's why we're just not seeing unemployment tick up that much as a result of these layoffs.
I was going to ask you that, Julie. Like, what is the matchup between the job openings and these layoffs in the tech sector? I would worry that you'd get laid off as, say, a programmer at Twitter and have to, your best option is to go work as a barista at Starbucks or something. But I guess it's not that dire right now, that there is still a lot of openings in the tech sector for these layoffs that we're hearing about anecdotally.
About 3 in 4 laid off tech workers appear to be getting new jobs in tech based on our surveys. So, there are still tech opportunities. There are companies that are profitable who are seeing their share prices rise. I mean, it's a small set of tech companies, but there are solid, healthy tech companies with strong growth prospects. And then even within tech companies, many of them are laying off workers in their least profitable teams or functions or sections, but still hiring pretty rapidly in other parts of the business that are very profitable and strong. And so, sometimes one needs to look at these layoffs as a share of employment in the entire company, and often they're not really changing headcount very much overall. And then in the broader economy, there's still huge demand for tech workers, both within tech and beyond tech. Every other industry, every company is becoming a tech company in America with a website, an app, and increasing amounts of data that they collect and analyze.
So what does it all mean for wage growth, Julia? Are we going to see sort of that wage price spiral that people talk about where workers are demanding higher pay and so companies raise their prices to pay for that? Is that a risk, do you think, going into 2023?
So I don't think so. I don't think we're seeing a wage price spiral because we are actually seeing prices come down. We're seeing goods prices come down, and we're seeing wage growth appear to sort of slow or level off. So I don't think that is too much of a concern. I think we've now given time for supply chains to sort of repair and improve. And so as workers now start receiving real wage increases again, that will, sustain demand for goods and services, but without putting too much pressure on their prices. So I think there's something called the beverage curve in labor economics, which is a curve showing job openings versus the unemployment rate. And what the Fed really wants to do is to reduce job openings, reduce that gap between the number of people seeking jobs and the number of jobs available without pushing unemployment up too much. So far, they're actually managing to move down that beverage curve, pushing job openings down ever so gradually without really increasing unemployment. It would be a sort of a miracle if they manage to do that. That's not usually the direction that this curve moves, but it seems to be working.
All right, Julia, we got to leave it there. That is Julia Polak. She is chief economist over at ZipRecruiter. Let's now get a check on the latest world and national news with Denise Pellegrini in the Bloomberg 1130 newsroom. Hi, Denise.
Hey there, Katie. Thank you. And President Biden, as you've been talking about earlier, welcoming Ukrainian President Vladimir Zelensky to the White House. Biden saying just a few moments ago in that greeting that the U.S. will provide the U.S. Defense Patriot missile system to Ukraine, and Biden also praising Ukraine's efforts to repel Russia's invasion and Russian leader Vladimir Putin.
But the Ukrainian people continue to inspire the world. I mean that sincerely. Not just inspire us, but inspire the world with their courage and how they have chose the resilience and resolve for their future.
And Biden also using some interesting wording in that greeting, saying that the U.S. will support Ukraine in pursuing a, quote, just peace. Now, Zelensky thanking Biden for making his first known trip out of Ukraine possible.
Great honor for me to be here. Dear journalists, I thank you so much for the invitation. I really wanted to come earlier. Mr. President knows about it, but I couldn't do it because the situation was so difficult. And now, if I'm calm, I came that we control the situation, and because of support. And first of all, because of your support.
And now Zelensky and Biden, just to walk you through events for the rest of the day, they will be holding a joint press conference later this afternoon. That is supposed to be 4:30, although, as you know, President Biden often late on things. We'll see. Also, Zelensky will be addressing Congress tonight. We'll have special live team coverage of this historic event with a special edition of Balance of Power starting at 7:30 Eastern. Meantime, U.S. Attorney holding a press conference on FTX co-founder Sam Bankman-Fried. We're tracking those developments for you as well. Global News, 24 hours a day. I'm Denise Pellegrini.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And this update is brought to you by Innovation Refunds. Small businesses impacted by the COVID-19 pandemic may qualify for the Employee Retention Credit. Let Innovation Refunds do the work to find out now if your organization qualifies for ERC assistance. They've already helped businesses claim over $2 billion in payroll tax refunds. Learn more at getrefunds.com. On our way to the closing bell, the equity market at much higher levels. We've been rallying through the day following those better than expected earnings after the bell yesterday from FedEx and Nike. FedEx shares right now up 3.5%. Nike is up nearly 13%. And on top of that positivity, we had word this morning that U.S. consumer confidence rose in November by more than forecast. We are now at the highest level since April. The S&P 500 better by 1.4%. Energy leading the advance. The price of crude oil in the extended session is higher by nearly 3%. We are extending gains in New York trading for a third day after a report showed that U.S. crude inventories dropped in the most recent period. WTI now 78.35. S&P 500 is up 1.4%. The Dow Industrial Average ahead 1.5%. And the NASDAQ Composite climbing by about 1.5% as well. I'm Doug Krisner, and that is your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Connection lost.
I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we are about 18 minutes away from the close of trading on December 21st. Let's get some insight from Lisa Erickson. She is head of the public markets group over at U.S. Bank Wealth Management. She joins us now on Zoom from Minneapolis. Lisa, we're looking at a big, broad rally today, but when you look across Wall Street forecasts for 2023, there is a lot of doom and gloom when it comes to the stock market. Where do you fall when you look at the balance of risks?
We're really more cautious on the U.S. equity market going into the new year. And the reason why is that, as you pointed out, when you look both at the macro outlook and the micro outlook, we continue to have some headwinds. Chief among them is the fact that we still have inflation while declining at relatively elevated levels. And as long as that remains the case, we're going to have the Fed continue to be more restrictive in their policy, again, maybe at a slower pace, but nonetheless really trying to tighten. So you combine those two factors with the fact that consumers and companies now have been having to deal with this tougher environment for some time, and it becomes a question again of how long the consumer can continue to hold out and those corporate profit margins continue to hold out in terms of maintaining relatively resilient levels, but not without some slowing.
So, Lisa, what does it look like in practice to be cautious on the equity market at this point? Do you avoid it completely, just go all into fixed income, or do you try to find those stocks that actually do benefit from higher rates and pricing power? How do you sort of put cautiousness into practice in the market?
We're advising our clients to be underweight U.S. equities relative to their long-term strategic allocation. So we think, again, caution is warranted in how they're positioning themselves across asset classes because of those factors that we just talked about. Where we would put that money in term is relatively more sort to fixed income, higher quality fixed income, as well as global infrastructure listed stocks, which would contain sectors such as utilities. It would contain midstream energy, transports, all of those kinds of infrastructure items that, again, tend to offer, like high quality fixed income, higher levels of interest or dividends. And so that higher level of incoming cash flow helps to buffer the portfolio in more difficult environments.
And so high quality fixed income, that makes me think of treasuries. And treasuries are interesting when you think about the news that we got from the Bank of Japan yesterday, that they're lifting the cap on yield curve control. That spurred some fears that maybe if you think about Japanese bond buyers, they're such a consistent force in U.S. government bond markets that maybe they'll stay home if yields are a little bit higher over there. When you're looking long-term at the fixed income market, do you factor that in, or do you think those fears are overblown?
To your point, there are forces that continue to pull up yields across the globe. Obviously, here in the U.S., the Fed itself is tightening. And we have central banks globally, the most recent of which being the Bank of Japan, really having to raise their targets or their bands. Nonetheless, we still think that having that higher income cushion that can come from higher quality fixed income makes sense. And right now, all other things being equal, we would also lean slightly shorter in maturity, keeping closer to the benchmark because of those factors. But we do want to continue to keep an outlook. We do see that yields overall are quite attractive. So at some point in the future, we might actually look at potentially extending out that maturity profile of a fixed income portfolio. But right now, we're still on the relatively short side, again, because of the factors that you mentioned.
Lisa, I know at U.S. Bank Wealth Management, you have a proprietary health check, you call it, of macro indicators. Could you talk to us a little bit about what some of the inputs are and what is that health check showing for the U.S. and some other parts of the world?
We do have a global proprietary health check that looks across countries, whether in the developed markets or emerging markets, at how activity is going on in general sectors of the economy, whether it's consumer, housing. And for each of those sectors, what it does is it bottom up puts together a number of key indicators in each area. What we've really been seeing here over the course of the last year, whether it's in the U.S., whether it's in developed international markets or emerging markets, is we definitely have seen slowing in the trend of where those indicators are pushing. In addition to that, the absolute level of the indicators have come down quite a bit. So all of those are really just pointing to the fact that the macro environment has been impacted by, again, the tougher market monetary environment, in addition to just some of the natural deceleration that comes from the fact that 2021 was a big reopening year, and it's just hard to keep growth at that same level.
And so, Lisa, you're cautious on the equity market. Do you see any opportunities to go on offense when you look at equities, or are you mostly playing defense here?
One of the areas within equities that we do think, again, is interesting right now are more dividend-oriented equities. So in line with the theme that we had on the fixed income and global infrastructure side of, again, pulling some of that cash flow up front in what could be, again, a more volatile market, we see within equities, again, some of those dividend-paying stocks, particularly those with good ongoing dividend growth, really make sense.
You know, Lisa, I've talked to a few people, fund managers and strategists, who have said, well, 2023 is going to start out rough. It's basically going to be a lot like 2022 was. Volatility, inflation still too high, rates still elevated. But then they expect sort of an inflection point in the year where it's clear that inflation has come under control and the Fed might actually start signaling that they're going to ease eventually. How do you think about the year coming up? Is it possible to sort of break it into sort of a good, bad first half and a better second half? Is that a possibility, do you think?
Well, it certainly is a possibility that hopefully over 2023 things improve. And of course, for all of us, we do hope that's the case. When we look at the year overall, however, we just see a lot of uncertainty. We haven't been in a period like this where again, the level of forecast uncertainty is high. And I think that stems from a couple of things. So one is just the fact that we've never been through a period like we've had where we had a sudden event like a global pandemic, shut down the economy. Then we've had extraordinary monetary and fiscal stimulus leading to reopening. And then, unfortunately, elevated inflation because not only of demand, but because of supply chain constraints. So, again, how that exactly works out and the pace at which, again, supply comes back online, including in the labor force, just really remains to be seen. So with all of that, there is high uncertainty, I think, about the trajectory. So we, again, believe the best place to start is a more cautious stance, but we'll look at it as it continues to move forward.
All right, Lisa Erickson, she is head of the Public Markets Group over at U.S. Bank Wealth Management, joining us on Zoom from Minneapolis.
3:53 on Wall Street from Bloomberg World Headquarters in New York. I'm Doug Krisner with a look at today's company headlines. We begin with Intel. The company has broken up its graphic chip organization. Raja Koduri is moving back to his previous position as Intel's chief architect. Now, Intel says the goal here is to accelerate and scale the company's impact and to drive go-to-market strategies with a unified voice to customers. Carnival Corp reported a narrower than expected quarterly adjusted loss, and at the same time, the cruise line operator said booking momentum has continued into December. Alphabet's YouTube unit is nearing a multi-year deal for the rights to stream NFL Sunday Ticket. Sunday Ticket is a subscription package. It allows fans to watch afternoon games that aren't on their local TV channels. Shares in Tesla are trading higher after Elon Musk said he would step down as the CEO of Twitter once a successor is identified. Tesla shareholders have been concerned about Musk being distracted by running Twitter. Justin Bieber is reportedly close to a deal to sell his music rights to Blackstone-backed Hypnosis Songs Capital. The Wall Street Journal saying the transaction here is valued at around $200 million. And the theme park operator Six Flags Entertainment met with an activist investor advocating for the sale or separation of the company's real estate holdings. However, Six Flags said its own plan is working. Right now, shares in Six Flags up 12%. Those are some of the company stories we're following at this hour. I'm Doug Krisner. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, I'm Katie Greifeld alongside Mike Regan because both of those names you just heard, they're out all week. But in any case, we're here holding down the fort. And Mike, did you watch the World Cup finale?
Oh, I absolutely did, yes.
Yeah, I could have guessed.
As a matter of fact, in our Bloomberg pool,
Yeah.
I had none other than Argentina winning it all.
Wait, you had that?
I did.
You were so right.
But
Did you win money?
I won my $10 back. I think.
Okay.
I was third place. Everyone else, I blew all the earlier rounds.
I didn't even know that was a thing because I'm so disconnected. But I know that it's a big event. It's a big deal, especially for Argentina. So much so that actually the World Cup winners, including Messi himself, they had to be evacuated by helicopter from their celebration parade.
It's absolutely crazy story. And if you look at the images coming out of Buenos Aires, I mean, the amount of people that just descended upon the city. And our story today points out it's impossible to continue the parade given that the estimated 5 million people that attended it, and they just had to take the decision to just pull the players out of there on helicopters because fans were swarming the double-decker open-air bus. Two men tried to jump into it from an overhanging bridge. So a lot of finger-pointing going on in Argentina about who's to blame for this.
Exactly, yeah, the interruption of the celebration. Of course, it left millions without the chance to see their heroes. That's really triggered a political blame game in this football-crazed nation because you have World Cup winners, including Argentina's past 2 titles. They tend to share the celebration with the head of state. In this case, though, the players were reluctant to meet with top officials because, as the security minister said, they didn't want to mix sports with politics.
Right. And in an interview on the radio, the President Alberto Fernandez said he did offer the iconic balcony at the presidential palace to the players in downtown Buenos Aires as a safe place to sort of wave to fans instead of the bus. But Katie, they said they were too tired for that. I don't blame them. It's a long World Cup, 45 days of soccer.
I would be a little bit tired, I think. I don't know. I'm going to stick to the Peloton. But it is important to note, of course, Argentina's political situation, highly polarized, and there's a general election in October, so something to watch. Coming up, though, it's Beyond the Bell with Bloomberg Television. Stay tuned.
Most of the last several hours, the index up about 1.4% as we move closer to the closing bell. Full market coverage coming now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes from the end of the trading day, I'm Kaylee Lyons along with Shonali Bostic, counting you down to the closing bell. And here to help us take things beyond the bell with the global simulcast, we're joined now by Katie Greifeld and Mike Regan, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And it was a remarkably consistent trading day, Katie. We moved up and we stayed up.
We moved up, we stayed up, a big, broad rally. And what caught my eye about this rally is that it's December 21st, and you look at the trading volume, we're only 2% off the 20-day average. Again, just days away from the end of the year. That seems pretty remarkable to me.
Yeah, Katie, and I would point out a big rally in oil today. Front-month crude oil up about 3%. So that really has energy shares in the lead, which I think is interesting because this time of year, you often get those sort of counter-trend rebounds where the laggards of the year are outperforming and the companies that did the best, the sectors that did the best are underperforming. But not today, Shonali, with energy really in the lead.
Yeah, energy in the lead. I thought the dollar getting a little bit of a bid back was interesting also, but it was only a little bit. And that peak dollar story really floating through as we look to earnings season as well. I know that's going to be a big conversation and a big sigh of relief, frankly, for a lot of multinationals.
Yeah, especially those big companies, a lot of them technology that were facing pretty remarkable foreign exchange headwinds. Maybe that helps them, but as we talk about an environment generally for earnings, Katie, that the consensus on the street seems to be like is going to get a lot worse next year, we have to consider that as well.
Oh, yeah. How many times have you heard earnings recession when we talk about 2023?
Yeah.
That seems to be the consensus. Again, you haven't seen those earnings estimates come down maybe as much as you would think.
You haven't seen it, but we are hearing those closing bells ring. And let's take a quick look at where we are ending the trading day. The S&P 500 up about 1.5%. 38.78 where we close out. The gain's pretty consistent across the major averages. You also saw a 1.5% gain on the NASDAQ, and the Dow Jones up 526 points, Katie.
If you dial down on the S&P 500, just 36 names in that index closed red. So the gains were broad, they were plentiful.
Yeah, let's take a look at those broad gains, because look at all this green. It's just about every sector in the green on the day today. Consumer services really down only up about 0.2%, but then you have that 70% rise in consumer durables, semis up 2.45%, communications, tech, diversified financials, all up almost 2% or more on the day. Kaylee wore green, the market followed.
The market did follow, and it definitely was a market of stocks today. A lot of individual stories moving those indexes higher. Let's start with Nike, because we were here when they reported earnings yesterday. The retailer beat on revenue. They beat on margin. They said that those inventory levels, if they seem high, that's only because they were so low last year. Shares were up by about 12% or so. That was 15.5% earlier in the day, but still, biggest day for Nike since June 2021. Moving on, you also had Etsy rallying pretty healthily today, up 5.7% or so. That's after Evercore wrote in a report that they see signs of strong execution from Etsy when you look at app downloads, when you look at engagement. So that sent Etsy shares up today, again, by about almost 6%. They're up actually more than 80% from their June low, which I didn't realize. So quite a rally for Etsy. And I want to end on Carnival, because shares cruising today. That's after they reported earnings, and adjusted EPS came in a little light, but it was a narrower loss than expected. And Carnival had good things to say about bookings, so Carnival shares rallying about 4.7% as a result, Mike.
Yeah, Katie, I feel like I might be good luck for the stock market, because whenever I'm booked to come on and talk about decliners, you can hardly find a decliner. As you said, not much moving to the downside today. But here's a good one, not a stock we talk about a lot, but having a very influential effect on other companies today in the same space. Pebblebrook Hotel Trust. It's down about 8.5%, had fallen almost 10% earlier. It's a hotel real estate investment trust that cut its funds flow forecast for the year, basically saying same property operating results were below the previous provided outlook, due for one thing, the impact of Hurricane Nicole, but also just weaker business and leisure demand during the second half of the month. So it is pulling down some of the other hotel stocks. Host Hotels and Resorts down about 6%. Hilton Worldwide Holdings down about 2%. And one more on the downside, Stanley Black & Decker, those shares are down almost 2%. This is after Moody's downgraded the company's senior unsecured ratings to Baa2 from Baa1, and the company's junior subordinated notes also got cut. The analyst basically saying ongoing economic uncertainties and the resulting pressures on operating performance and cash flow will delay deleveraging, warning this downgrade, which Kelly is also affecting the stock.
Well, as we talk about macroeconomic uncertainty, we also know that has been affecting the chip makers, and we are getting earnings now just crossing the wire from Micron. Maybe some good news here. Their first quarter adjusted profit coming in at 4 cents a share. The estimated loss per share was 88 cents, so an upside surprise there. Then looking forward to their second quarter guidance, they're guiding revenue between $3.6 and $4 billion. So at the midpoint, just a touch shy of analyst expectations, which were at 388. And what the real headline coming out of here, Shonali, is Micron cutting their headcount by about 10% over the calendar year 2023. So trying to rein in some things on the cost side as they deal with what has been a softer demand environment for chips.
Yeah, 10% over calendar year 2023 in terms of headcounts. I would also want to talk to the second quarter adjusted gross margin estimates. Between 6 and 10% is what they are guiding. The estimate was almost 18%. So even though the gross margin, came in a little light this quarter, you're also seeing the next quarter also coming in light. There also will be charges associated with that headcount reduction. Sign of things to come, guys.
Yeah, and it's really interesting to see this tug of war playing out in the stock right now. Of course, EPS and revenue, seemingly good news. Then you have the fact that they are cutting headcount, trying to rein in those costs, and gross margin coming in a little bit light. Micron shares, they went up, they went down. Right now, they're up about 0.6% as we just parse through this information.
Yeah, and it's really been just such a tough year for chip maker stocks. You look at the Philadelphia Semiconductor Index, down about 33% year to date. I guess all those supply chain issues still a lingering concern early in the year, and now all this concern about a recession. Chip stocks really taking it on the chin this year.
Yeah, and Micron more so than most. You talk about the SOX index losses for the year. Microns have far outpaced that. This is a stock, as of the closing bell today, that is down 46.5%, and it looks like we are adding just a touch to those losses now. The stock flipping into the red and back into the green. It's very wishy-washy here in the after-hours trade as we parse through these results, Shonali. But this really just speaks to the very weak environment we are seeing for demand for so many of these companies, and to bring it back to the conversation about earnings overall and whether expectations are just still too high for next year, it raises a question of how many more downward revisions need to come.
Yeah, absolutely. Second quarter, of course, tough as well. However, you are hearing some commentary from executives saying that they expect consumer inventories to enable higher revenue in the second half and strong profitability once we get past this downturn. So the second fiscal half of the year is what they're guiding for improvement here. So silver lining in what are otherwise muted numbers, muted expectations relative to what existed before.
And we're getting a little more context on that headline that Micron does plan to cut headcount by about 10% over the calendar year 2023. So the company saying that's through a combination of voluntary attrition and personnel reduction. So a combination there. The company, again, also expects to incur charges of at least $30 million in the second quarter. That is substantially all in cash expenditures.
Yeah, and Katie, we keep hearing about these job cuts in the tech sector. 10% at Micron is not an insignificant number. This is a company that has 48,000 employees. So eventually all these anecdotes start to add up to something real, Kaylee, happening in the job market for tech jobs.
Well, that's such a good point, Mike, because we have seen announcements like this coming from other companies talking about reducing their headcount or freezing hiring, just not expanding it whatsoever. And yet you aren't necessarily seeing it yet reflected in the economic data, Shonali. The economic data is still suggesting that the labor market is still incredibly tight, it's still hanging in there, and that the Fed is not yet able to achieve its objectives on that front.
Yeah, it's really interesting to see the pressure on both the top and bottom line as we look through these numbers. The revenue falling a little shy of expectations, and the gap outlook for the second quarter is lower yet. And remember also, they adjusted their expectations here for operating expenses, so that will impact that bottom line over there by the tune of about $137 million. They're expecting them to come in at about $1.08 billion in the upcoming in the current quarter. So
yeah, and all things said, Micron shares were up about 1% in regular trading. So take that into account when you look at these after hours move. It's not really that sharp of a negative reaction. And the QQQs, the NASDAQ 100 ETF, also hanging in there. So I don't know. Do you believe in Santa Claus or what?
That's a bigger question, one that we can't answer right now because it's time for us to go. That is going to do it for our cross-platform coverage of the market close on Bloomberg Television, radio, YouTube, and on Bloomberg Quick Take. We're going to be back here tomorrow, same time, same place. With us. Her name is Vildana Heinrich. She is a cross-asset reporter at Bloomberg News. She actually sits right behind me, Mike. I don't know if you knew that.
I did know that. What's it like sitting next to Vildana?
It's not so productive. It is super fun. Yeah. It is a blast. So fun. Unfortunately, we chit-chat all the time, but we did manage to get out at least one more story before the year ends. We published that last night. It's all about the Grayscale Bitcoin Trust and all about a trade that was the hottest trade in crypto for so long, and now it's a widowmaker. Vildana, tell me.
Well, you know what I love best about this,
yeah,
Katie, is I wrote about this issue in 2016, and I had no idea what was causing it, just this massive premium to the net asset value of this fund. And I said in my column, all I could conclude is something weird is going on here.
Deep thoughts.
2016.
Ours were a little deeper.
6 years later, tell us what the weird thing going on is.
Well, can I first just point out that Katie said I'm the most excited interview for her today, meaning that she's more excited talking to me than she is talking to you today.
Oh, yeah.
I mean,
That's-
Mike and I
point
are
it
just
out.
having
Sorry.
a conversation, not so much an interview.
That's my lot in life.
But I mean, 6 years ago, Mike Regan was onto something.
Yes.
It was weird, and it continues to be weird. Set the scene for us. What's going on?
I think we can think because this product, this Grayscale Bitcoin Trust, GBTC is what a lot of people refer to it as. It's been a linchpin in the crypto industry. It's, as you mentioned, extremely, or at one point was extremely popular. Billions of dollars have flown through this trust. So you can sort of use it as a way to measure the ups and downs of the crypto industry. When it was trading at a premium to its net asset value, to the holdings that it has inside the trust, the Bitcoin that it holds, that's when it was super popular. Today, it's trading at something like a near 50% discount to those holdings.
That seems bad.
It does seem bad, yeah. So basically what happened is in early 2021 is we just got a flood of different types of similar-ish products. So in Canada, we got some Bitcoin ETFs, which we don't yet have in the US, but it opened up sort of the suite of products that investors could be looking into or putting their money towards too. At the same time, we had just a flood of shares. Hundreds of millions of GBTC shares came to the market at its height. So it just helped create this discount. Plus, we have a lot of tough things happening in the crypto space.
Some tough things going on, for sure.
Yeah.
Well, in a way, the discount makes all the sense in the world to me. Obviously, Digital Currency Group is the parent company of it is having some problems, as is every crypto company in the world right now. But how do you explain that massive premium when it did exist? I mean, is it just simply, retail traders not knowing what they were buying, do you think?
That's probably part of it. But the other part is that the trust, GBTC, created this opportunity for an arbitrage. So basically, Katie and I have been writing about this also for years now, where you could take Bitcoin or you could borrow Bitcoin when when the trust was trading at a premium. You would put it into GBTC and you would get GBTC shares in return. And after a lockup period of 6 months, you could sell those shares and you would lock in a profit. The lockup period used to be 12 months. At some point in early 2020, it turned into 6 months. But anyway, after those 6 months, you would make a profit.
And it worked
nice
for a long time, and then it started to not work at all. But tell us about some of the names involved with this trade, because it was so ubiquitous, not just in crypto, but there were a lot of traditional finance players playing in there as well. Name some names for us.
There were a lot of traditional finance players involved because there were so few other ways for traditional finance, for retail investors, for anybody else, at least in the US at that time, to actually get involved in crypto, up until the last couple of years when we actually started having these other options that we were just talking about. But we had also a lot of crypto lenders involved, where maybe you would go to BlockFi and you would either take out a loan to buy Bitcoin to then put into the trust, or you would borrow Bitcoin straight from BlockFi. Then you could use the shares that you got, the GBTC shares that you got from Grayscale, and you could pledge them as extra collateral. And then you could have more shares of GBTC. And so it was just this layering on that.
A layering of leverage.
Yes.
Well, let's talk about the corporate layers involved here, because Grayscale, as I pointed out, is owned by who?
DCG.
And what's going on with them?
So DCG is, maybe we can say it's a company that you've never heard of, that's one of the biggest within the crypto space. It's obviously been in the news quite a bit recently, so maybe you've heard of it recently, but it's been around for quite a long time, and they own just a bunch of different companies, a bunch of different subsidiaries. They own Genesis, which has a lending and a trading desk, and
which isn't having a great time right now.
It's not having a great time. They've been having troubles. Obviously, a lot of the lenders within the crypto space have been having a lot of troubles. It owns Grayscale, is one of its subsidiaries, and so there's just a lot of bad stuff happening in crypto that is impacting all of these companies, especially the lenders, and especially anybody that had exposure. As we didn't talk about 3AC yet, actually, Three Arrows Capital, which held at one point. I remember them too. But it feels like 10
this
years
all really
ago.
happened in 1 year, all these things?
Yes, can you believe it? Oh my gosh. We need a nap.
Crypto lasted a decade, I feel like.
We need a nap. But at one point, they held something like 5% of GBTC because they were doing that arbitrage trade. They were doing that arb trade. It was working fantastically for them for a while until it wasn't.
And GBTC at one point had ambitions to be sort of the first Bitcoin ETF, right?
Still has those
Yeah,
ambitions.
how does that, what do you guys think? Where does that stand now, those ambitions? Are they just obliterated with all this, do you think?
Well, they're actually currently suing the SEC because...
Which is interesting.
It is interesting. They tried to convert. They've been filing applications to convert the trust into an ETF. Of course, a physically backed ETF is a structure that the SEC has yet to approve.
In the U.S.
In the U.S. It exists elsewhere. So they got denied again in this past June, and then within hours, they filed a lawsuit against the SEC. That is ongoing, but at the same time, there's a lot of lawsuits going on. Grayscale itself is being sued over this trust.
Yes, by a hedge fund, Fir Tree Capital.
I've always been very bullish on crypto lawyers. That is the growth industry for this.
Yeah,
this
how can we invest in crypto lawyers?
I don't know.
That's the investment to be in.
Figure it out, and we'll all retire early, I think.
Well, I mean, there's a lot of money still locked in this trust. We're talking about over $10 billion.
Right.
Talk to us about the feeling on the ground among some of the investors who, again, are long-term holders in there that have seen the value of their investments just eroded.
So because this isn't an ETF, it's a totally different structure. The Bitcoin that you put into it, it gets locked up. You can't get it out. There's no redemption mechanism there, the way that there is in the ETF space. And so if you put a bunch of Bitcoin in or you put a bunch of money towards this thing and it's trading at a 50% discount, you're not going to be very happy, to say the least. Hence, some of the lawsuits that we're talking about, and just, I think more people are coming out voicing their discontent.
Well, with a 50% discount to Bitcoin, are there any bulls out there saying I'm all in on GBTC?
There's always bulls in crypto.
Yeah, but on this vehicle specifically, it seems
Kathy
like
Wood.
Kathy has been buying,
Yeah, she's been buying. She was on Bloomberg Business Week, actually, with the actual hosts, talking about the fact that
You're the actual host.
We're not. Tim Stanovic, Carol Master did a fantastic job with that interview, and she talked about it. I mean, at a certain point, 50% discount, you'd have to think at a certain point it starts to close.
Can I call Mike out just for one more thing?
You have 10 seconds.
Boy, this was a mistake.
Mike and I have a podcast together, and he has yet to plug us.
Well, he has 5 seconds. I'll do it for him.
What's it
It's
called?
What Goes Up.
What Goes Up?
You can listen to him, Mike Regan, and Vildana Heinrich. She's a cross-asset reporter at Bloomberg News. But this is Business Week. This is Bloomberg Business Week on Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Let's begin with the earnings after the bell. Micron reported a disappointing quarterly cash flow from operations, a tune of about, or a figure I should say, of about $943 million. The street was looking for $1.8 billion. Going forward, Micron sees adjusted revenue for the current quarter in a range of between $3.6 billion to $4 billion. Street was looking for something closer to $3.9. Importantly, Micron has announced plans to reduce its headcount by about 10% over the calendar 2023 year through the combination of voluntary attrition and personnel reductions. Shares right now in Micron lower by about 0.2%. Generally speaking, in the regular session, tech stocks powered gains for the equity market. Investors digested better than expected earnings from FedEx and Nike, along with a bounce in consumer confidence. Dow today up 1.6%, S&P ahead nearly 1.5%. Similar gain for the NASDAQ Composite. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, thank you so much, Doug Krisner. Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds to apply for a payroll tax refund if your small or medium-sized business was impacted by COVID-19. Innovation Refunds clients already claimed over $2 billion in payroll tax refunds. Get started at getrefunds.com. And of course, the topic of today is Ukrainian President Zelensky visiting U.S. soil, meeting with U.S. President Joe Biden. Of course, this is President Zelensky's first trip outside his country since Russia invaded Ukraine on February 24th. That was 300 days ago. And when you think about the significance of this moment, at this moment in the war between Russia and Ukraine, it's pretty historic, Mike.
Yeah, Katie, especially, I mean, who would have, if you could go back in time to right when Russia invaded, I don't think anyone I talked to believed it would last this long. That
Right.
300 days later, we'd still be talking about this resistance to this invasion. I think everyone assumed it would be over in a matter of weeks, that Russia would just kind of steamroll
I
in.
think Vladimir Putin, too.
Clearly he must have thought that too. So, as you said, we are waiting a press conference here between Joe Biden and President Zelensky of Ukraine. Biden and First Lady Jill Biden actually have greeted Zelensky already at the White House on the South Lawn shortly after 2 p.m. And we did hear a little bit of the interaction between the two presidents. President Zelensky brought some medals for President Biden. But I think the press conference obviously will be a must-watch and must-listen-to event, because we'll really hear some of the hard questions that we've been asking guests. What's next? How long is this going to take? What's really the bill going to be? There definitely is a backlash in D.C. About how much we're spending. Is it worth it? And it'll be great to hear, from both of the president's own mouths, sort of the reasons why this is a good investment for the U.S.
And that backlash that you bring up, of course, that's going to be front and center later tonight, because Ukrainian President Zelensky is due to address the U.S. Congress at about 7:30 p.m. And I mean, as we walked through with our multiple guests today, you think about, again, that opposition to whether the U.S. should be sending aid to Ukraine. That's from the likes of Matt Gaetz, from Marjorie Taylor Greene, taking a pretty hard line there. Doesn't seem like the expectation is that they're going to be budged at all from what we have to say or what we have to hear from Ukrainian President Zelensky. But we have heard a little bit, again, from Joe Biden interacting with President Zelensky in the Oval Office earlier today. He said the Ukrainian people, they continue to inspire the world. He also said that the U.S. seeks a, quote, just peace in the conflict. So.
Right. And Zelensky, for his part, he told Biden in English that Ukraine really controls the situation in the war thanks to U.S. support. His take on things. He thanked President Biden for big support and leadership, cautioned that the war is not over. The big issue, Katie, of course, is winters are pretty rough in Ukraine. They can be pretty rough. President Biden said Russia's President Vladimir Putin is trying to use winter as a weapon by bombarding civilian infrastructure in Ukraine with missiles and drones, including power, heat, and water supplies. So it really is, I feel like this whole war has been sort of an acute, critical issue all year, but this is really ramping up now at this time of year, especially. I don't think it's an exaggeration to say this is a historic speech today in Washington. A president in the middle of war, leaving his country, as I said earlier, dressed in military green. He's not showing up in a three-piece suit to make this speech. He, at least when he came to the White House, he was dressed in military garb, really, presenting this image to the world of a wartime leader who is just taking a quick break to come and sort of gather more support from the U.S. I don't think I've ever seen anything quite like this in my lifetime, to be honest.
Yeah, no, me
it's
neither. Yeah, no, it is fascinating. It's historic. It's important. Let's talk about the significance of this moment more with Sound On host Joe Matthew joining us now. And Joe, we're awaiting this joint press conference between President Biden and Ukrainian President Zelensky. What are you expecting to hear? What message do you think that these two are going to try to transmit?
Well, I think it's going to be similar to what we heard in the Oval Office, as you guys were just describing here. This could start at any moment, by the way, although we should get a 2-minute warning before they come out. And we do have the two podiums set up here in the East Room just to paint the picture for everybody, the gold drapes behind them and the American and Ukrainian flags. It was tough to miss the flags that line Pennsylvania Avenue this morning as I made my way up to Capitol Hill. Every other lamppost has a Ukrainian flag on it. And many of the lawmakers this morning, and I'm sure will be tonight, wearing blue and yellow here. This is about making the case for what President Biden says is saving democracy, the fight for democracy. And Mitch McConnell, the Republican leader in the Senate, made the case this morning, knowing that there is some skepticism, some reluctance, as you said, among certain conservative Republicans in the House. It's much more of a House side issue here, and it's further to the right. It's Matt Gaetz, it's Marjorie Taylor Greene, to a lesser extent, Kevin McCarthy, that they don't want any more blank checks, and in some cases, they say not another dollar is going to Ukraine. The money in the budget that's up for a vote tomorrow will get Ukraine about halfway through next year. President Zelensky knows this, and he needs to make the case today that we're not done. I'm asking you for more.
Let's also bring in Yulia Mendel into this conversation. She is the author of The Fight of Our Lives, My Time with Zelensky, Ukraine's Battle for Democracy, and What It Means for the World. And Yulia, it's great to have you with us. Of course, you served as Zelensky's press secretary for 2 years. And given your time that you've spent with the man, what you know about his messaging, what front do you expect him to present both at this press conference that we're awaiting and tonight in front of the U.S. Congress?
Well, yes, thank you for having me. And this is really a historical visit, very significant visit that the whole world is actually watching these days, right now, this moment. So let me say that Ukrainian political elite for the last week is discussing a messaging that comes from the office of the president and from President Zelensky himself. The president was talking that here inside Ukraine that he expects to have peace in 2023. Even he was talking about early months of 2023, because Ukraine is not the country of war. We are the country of democracy, and we are the country of peace. And definitely Ukraine wants peace more than anyone else. So I'm sure that this visit was an opportunity, a window of opportunity to show that we are Ukrainians are very determined to defeat the most aggressive and the most unpredictable autocracy these days, which is Russia, and actually to achieve peace and to make democracy feel safer and feel insecurity. I'm sure that there are a lot of questions to discuss what peace looks like and what defeat of Russia looks like. And of course, President Zelensky wants to hear that the United States will stand with Ukraine as much as needed. Let me just remind you that President Zelensky often says that we are very determined and we have capacities to return Crimea that Russia annexed back in 2014. And I'm sure that this is a very sensitive question for the U.S. administration for the reason that they think Russia can escalate war and can blackmail with nuclear weapons. There are a lot of other questions that are defining the battlefield today, but there is no any argument that this is a very important visit, and President Zelensky believes that today's negotiations can help Ukraine finish this war next year. He even already mentioned that he is expecting to have peace in the next year in Ukraine.
You know, there's been a bit of a pushback among some of the far-right politicians, as Katie and I were just discussing, who believe that this is just getting too expensive for the U.S. support. So, Lulia, how would you sort of advise President Zelensky to sell continued support from the U.S. to these skeptical lawmakers? What is it that the U.S. stands to gain from this investment?
Well, thank you for this question. It's very concerning, like for many Ukrainians, to hear that there are such, statements. Let me first say that Ukrainians understand that this is not just our fight, and it's not that all successes belong only to us. We understand that the successes that are happening on the battlefield in Ukraine belong to us and to our Western partners and to every American that believes in Ukraine. So from all Ukrainians, we thank you. And the second thing, this is not the fight just for somebody's territory. This is the fight of all our lives. This is the fight for equal rights. This is the fight for freedom, for independence, for the values, to live, the life that we want to create and to have choice in our life. This is the fight for human rights. And we defend there not just, some post-Soviet country. We defend for the right of every country to choose their path and to live the life of democratic, independent, and free country. And that's the most important message, and that's why we ask so much to stay united until it's needed to defeat this aggressor so that we can actually prosper together. Ukraine belongs to the free world, and we share the values of Americans, share the value of Europeans. We want to be recognized and to stand equally against autocracy.
And Joe, I mean, we've spoken a bit about the Republican opposition to continued aid, to further aid to Ukraine in this fight against Russia. But beyond the hardliners out there, the Matt Gaetzes, the Marjorie Taylor Greens, do you think that this will move the needle for those maybe on the margin?
I do, and I don't know exactly who you're referring to, because I do want to stress that is a small minority of conservative Republicans in the House who are making noise right now and are also trying to test Kevin McCarthy in his seeking the speakership here. But look, I'll answer the question more like Mitch McConnell did on the floor of the Senate this morning. This is not about charity. While we are helping our brothers and sisters in Ukraine here in the fight for democracy, no one can deny that. He says this is about hard, cold American practicality. If Russia is allowed to win this war, it destabilizes the entire continent and threatens the security and financial interests of the United States all over the world. So you can look at this a lot of different ways. It's not just helping Ukraine win this. It's helping to defeat Russia, which is a threat to international security.
Well, Joe, also, what is the sort of national pulse on this issue? Outside of D.C., is there any, sense that America is still, for the most part, majority of the population is on board with our support for Ukraine?
It has polled very well right up until the midterms. We don't have probably more recent research on this, but a vast majority of Americans do support this. And when Kevin McCarthy says no blank checks, he's not saying that we're not going to send any more money. He's saying that we need to actually have some better accountability on how the dollars are being spent. There's been some concern that the Biden administration has been throwing money at this. But listen to President Zelensky when he comes out here. He's going to say, we need more. We need a lot more. And while we're celebrating the delivery of a Patriot missile defense battery today. That's one battery. They need dozens of them across the border and in cities like Kyiv, where they are preparing for another potential assault in the winter by Russia.
And of course, they need a lot more, in part because we're on the 300th day since Russia actually invaded Ukraine. And Mike and I were talking a little bit earlier about how a lot of people would be surprised if you told us in early February or late February that this would stretch out over 300 days. But Yulia, give us the Ukrainian perspective. I mean, were you surprised that it's dragging out this long? And in your view, I mean, how much longer could we be here?
Oh, well, definitely Ukrainians are concerned about a possible fatigue in the West. But let me say that no one is tired of this war more than any Ukrainians. You know, I live in Kyiv, and for the last 3 days, I almost don't have any light and heating, and the water comes from time to time. And definitely it's not just about some comfort. It's about, sitting at home and listening to kamikaze drones and explosions and air defense explosions just behind my window, and just chatting with, my friends and my family if they are okay. My family lives in Kherson region, which is in the south. And every day, literally, they spend under missiles and kamikaze drones. The aggression of Russia is like literally enormous. At the same time, what I see, despite of being physically tired, we have quite high morale. And Russia believes that if they bully us more, if they, keep killing and damaging infrastructure, keep sending missiles, we will give up. But this is different in Ukraine. We have different type of mindset. We're not giving up. The more they pressure us, the more we resist, for the reason that we understand that this is inhuman, this is cynical, this is brutal, and this doesn't have right to exist, this type of behavior from Russia. So when I talk to people here, we believe that we will stand to the very end. We understand already that we can win. Look, Russia was trying to pretend a huge power, and it totally destroyed its image that its propaganda has been developing for dozens of years. Like they needed to retreat from Kyiv, from Kharkiv, from Kherson, and they now chat that they can retreat from the left bank of Kherson and from Zaporizhia region. So it means that, we can win. We are determined to win, and we know for what we fight. We actually fight for the life, we fight for freedom. So let me say that, yes, we are very tired here, believe me, and we are looking into this winter a little bit scared, understanding that there is the chance for another invasion, and that there is the chance that we will spend it in darkness, and there will be cold, and maybe there will be lack of water. But at the same time, it's our home, and we know that we can rebuild, and we know that this is the biggest territory of freedom in post-Soviet region. So we know that we must stand.
Yulia, let's talk a little bit more about how you're preparing for this winter. I mean, clearly the winter's already started, and it must be cold there already. But are you worried about keeping warm, about having enough water, enough food? How are you sort of preparing, and how are all your friends and family preparing for this long winter ahead?
Yes, here in the rear, we have like different type of weapons, power banks, generators, candles. These are like our new type of weapons. And we sit at home now. We have a lot of power banks and a lot of candles, but we give to each other already things that can get you warmer. For instance, today my husband sent my aunt in the Kherson village a very small generator just for 2.5 kilowatts. But at the same time, I know that on the street in that village, there is only one generator, and my aunt goes there to charge her telephone. So if we speak just about, preserving refrigerator, charging the telephone, and maybe having the television on or some lamp, that will be enough to send at least small one. We are very grateful to so many countries that they are sending this so much needed energy facilities. Today, one of our northern region that, by the way, was also invaded by Russia, Chernihiv region, has got 44 big generators from Latvia. And many other countries are trying to send, what is necessary. So in the rear, it's, anything is good to keep warm and to have light. But also, let me just remind you about Starlinks. They were very helpful, and you know, any threat to lose the Starlinks can be really very big for Ukrainian soldiers and for Ukrainian civilians. Like when Kherson was liberated in the south of Ukraine, 210 Starlinks were sent there, and only after that I managed to call my parents and to learn that they were all right. So it's also about the connection. It's also about the necessary equipment to repair, because our emergency services, they work round the clock to repair the damages that Russia has done to Ukraine. But right now, Kyiv is in the worst condition. There are 60% of people who stay without electricity, and they really work round the clock, try to renew all the energy facilities.
Really interesting to hear, especially that note about Starlink, of course. That is one of Elon Musk's many projects, really important on the ground in Ukraine. Of course, we're in conversation with Yulia Mendel. She is the former press secretary to Ukraine President Zelensky. And we're also in conversation with Sound On host Joe Matthew as we await this joint press conference between President Biden and President Zelensky. And Joe, it's a short, it's a compact, it's a busy trip for President Zelensky. Let's talk a little bit about the logistics here, because he was greeted by President Joe Biden, by the First Lady at about 2 p.m. How long will he actually be on U.S. soil?
We don't know that for a reason, and I'll just let you know that the script has just been placed on the podium. The chairman of the Joint Chiefs, the Secretary of Defense, the Attorney General just walked in the room, so this is just about to begin here. As far as his departure, they're keeping this very close. This security situation is a very real one for President Zelensky, which is why this is his first visit. We didn't even know until he was on the ground that he was actually here in the United States, wheels down, a little bit after noontime today. So yes, it's a very compact schedule. When I was on the air last evening, when this broke during Sound On, at this time yesterday, it hadn't even been made official yet that this was happening. So it was finally confirmed during the evening time, and here he is suddenly in the Oval Office. Our reporting suggests that the invitation went out to him Friday, and plans started to come together over the weekend. It has been remarkable how little information has leaked from this visit, which really again underscores the threats against President Zelensky and his family.
It is remarkable, and we'll see what's coming from this joint press conference. It looks like it's imminent, so we're going to say goodbye now to Sound On host Joe Matthew. You can catch him at 5 p.m. Wall Street time every day. And we're also going to say goodbye to Yulia Mendel. She is the former press secretary to Ukraine President Zelensky, and what a great perspective to get. She joins us from Ukraine. And it looks like, again, we're about to get started. We know that members of the Ukrainian delegation are starting to come into the room, of course, the East Room of the White House. This should begin in the next couple of minutes or so, Mike. And again, just a historic moment.
Yeah, and Katie, I think Joe made a great point on just the logistics of being a president of Ukraine and leaving the country, leaving the battlefield and flying to Washington, D.C. There's a lot of risk just in this trip for him. Oh, it looks like we're about to get started here. It looks like President Zelensky is approaching the podium. So
Zelensky and Joe Biden are on the podium. Let's listen in.
President Zelensky, I'm honored to welcome you back to the White House. We spent an awful lot of time on the telephone as well as on video, but it's good to see you in person again. And we've been in close and frequent communication throughout this conflict from the very beginning, but particularly, it's particularly meaningful to talk with one another in person, look each other in the eye, because leadership through this terrible crisis has inspired the Ukrainian people, as you have done, Mr. President, and the American people and the entire world. This visit to Washington, your first trip outside Ukraine since February, comes as President Putin has escalated his attacks, his brutal attacks, targeting critical infrastructure to make life as hard as possible for not only innocent Ukrainians, but children and young children, and everything from orphanages to schools. It's just outrageous what he's doing. And we've, as we've heard, as we head into the new year, it's important for the American people and for the world to hear directly from you, Mr. President, about Ukraine's fight and the need to continue to stand together through 2023. This visit also falls on the 300-day mark of Russia's brutal invasion of Ukraine. 300 days since Putin launched an unprovoked, unjustified, all-out assault on the free people of Ukraine. 300 days of Ukrainian people showing Russia and the world their steel backbone, their love of country, and their unbreakable determination, and I emphasize unbreakable determination, to choose their own path. To Ukrainian people, I say to them all, you have demonstrated, you've shown your strong stand against aggression in the face of the imperial appetites of autocrats who wrongfully believe they might be able to make might right, and they're not able to do it. Thus far, they've stood alone, and you haven't stood alone. You have had significant help. We've never stand alone. You will never stand alone. When Ukraine's freedom was threatened, the American people, like generations of Americans before us, did not hesitate. The support from all across this country, Americans of every walk of life, Democrats and Republicans alike, had the resources and to rebound and resounding united way to provide unequivocal and unbending support for Ukraine. Because we understand in our bones that Ukraine's fight is part of something much bigger. The American people know that if we stand by in the face of such blatant attacks on liberty and democracy and the core principles of sovereignty and territorial integrity, the world would surely face worse consequences. And as I said, when Putin rolled his tanks into Ukraine in February, American people are prepared to have us stand up to bullies, stand up for freedom. That's who we are as Americans, and that's exactly what we've done. Even before the invasion began and Putin threatened Ukraine by building up his forces, we helped make sure Ukraine would be prepared to defend itself, even before they crossed into Ukraine. We provided a steady stream of defensive weapons, including air defense systems and artillery, ammunition, and so much more. And we've not done it alone. From the very beginning, the United States rallied allies and partners from around the world to stand strong with Ukraine and impose unprecedented, and I emphasize unprecedented, sanctions and export controls on Russia, making it harder for the Kremlin to wage this brutal war. More than 50 nations have committed nearly 2,000 tanks and other armored vehicles, more than 800 artillery systems, more than 2 million rounds of artillery ammunition, and more than 50 advanced multiple rocket launching systems, anti-ship and air defense systems, all to strengthen Ukraine. Together, we provided billions of dollars in direct budgetary support to make sure the Ukrainian government can keep providing basic fundamental services to the Iranian people, like health care, education, and emergency personnel. This includes another $2 billion that in direct budget support from the American people that the World Bank distributed earlier this week. We provided humanitarian assistance to help the millions of Ukrainians who have been forced to flee their homes because of Putin's inhumane, brutal war. Communities across Europe have opened their hearts and their homes to help Ukrainians in need. The United States has been proud to welcome more than 221,000 Ukrainians seeking refuge since March of 2022, including as part of Uniting for Ukraine, as part of our Uniting for Ukraine program. And today, USAID is committing more than $374 million in urgently needed humanitarian assistance for Ukraine. This will provide food and cash assistance for more than 1.5 million Ukrainian people, as well as access to health care, safe drinking water, and help stay warm in the winter for more than 2.5 million Ukrainians. The United States and our allies and partners around the world have delivered a broad range of assistance at historic speed, and has been critical to bolstering Ukraine's success thus far. Ukraine has won the Battle of Kyiv, has won the Battle of Kherson, has won the Battle of Kharkiv. Ukraine has defied Russia's expectations at every single turn. And President Zelensky, you have made it clear that he is open to pursuing, well, let me put it this way. He's not open, but you're open to pursuing peace. You're open to pursuing a just peace. We also know that Putin has no intention of stopping this cruel war. And the United States is committed to ensuring that the brave Ukrainian people can continue to defend their country against Russian aggressions as long as it takes. And I want to thank the members of Congress for their broad bipartisan support to Ukraine. And I look forward to signing the omnibus bill soon, which includes $45 billion in additional funding for Ukraine. I'll also sign into law the National Defense Authorization Act, which includes authorities to make it easier for the Department of Defense to procure critical munitions and defense materials for Ukraine and other key materials to strengthen our national security. Today, I'm announcing the next tranche of our security assistance to Ukraine. $1.85 billion package of security assistance that includes both direct transfers of equipment that Ukraine needs, as well as contracts to supply ammunition Ukraine will need in the months ahead for its artillery, its tanks, and its rocket launchers. Critically, in addition to these new capabilities, like precision aerial munitions, the package will include a Patriot missile battery, which will train Ukrainian forces to operate as part of the ongoing effort to help bolster Ukraine's air defense. It's going to take some time to complete the necessary training, but the Patriot battery will be another critical asset for Ukraine as it defends itself against Russian aggression. Altogether, today's new security assistance with humanitarian funding amounts to $2.2 billion in additional support for the Ukrainian people. We should be clear about what Russia's doing. It is purposefully attacking Ukraine's critical infrastructure, destroying the systems that provide heat and light to the Ukrainian people during the coldest, darkest part of the year. Russia is using winter as a weapon, freezing people, starving people, cutting them off from one another. It's the latest example of the outrageous atrocities the Russian forces are committing against innocent Ukrainian civilians, children, and their families. And the United States is working together with our allies and partners to provide critical equipment to help Ukraine make emergency repairs to their power transmission systems and strengthen the stability of Ukraine's grid in the face of Russia's targeted attacks. We're also working to hold Russia accountable, including efforts in Congress that will make it easier to seek justice for Russia's war crimes in Ukraine. Let me close with this. Tonight is the fourth night of Hanukkah, a time when Jewish people around the world, President Zelensky and many of the families among them, honor the timeless miracle of a small band of warriors fighting for their values and their freedom against a much larger foe, and how they endured and how they overcame. How the flame of faith, with only enough oil for one day, burned brightly for 8 days. A story of survival and resilience that reminds us that the coldest days of the year, that light will always prevail over darkness, and hope drives away despair. And that the human spirit is unconquerable as long as there are good people willing to do what is right. This year has brought so much needless suffering and loss to the Ukrainian people. But I want you to know, President Zelensky, I want you to know that all the people of Ukraine to know as well. The American people have been with you every step of the way, and we will stay with you. We will stay with you for as long as it takes. What you're doing, what you've achieved, it matters not just to Ukraine, but to the entire world. And together, I have no doubt we'll keep the flame of liberty burning bright, and the light will remain and prevail over the darkness. Thank you for being here, Mr. President. We're going to stand with you.
Thank you. Dear Mr. President, please put on equipment. Once again, Mr. President, President Biden, audience, journalists, ladies and gentlemen, I came here to the United States to forward the word of thanks to the people of America, people who do so much for Ukraine. I am thankful for all of this. This visit to the United States became really a historic one for our relations with the United States and the American leadership. In the last 30 days of this war, we have started a new phase of our interrelations with the United States. We became a real partners and allies with the content. And I felt today during all of my meetings and during our talks. Once again, I would like to thank Mr. President, President Biden, for his candid support and what is very important, the understanding of Ukraine, and for the support of the international coalition to strengthen international law. I am grateful to President Biden for his personal efforts, his steps that unite the partners and global South. When all countries of the world take some position and are focusing on cooperation and mutual understanding, this is very useful for all of the countries, for Ukraine, for the United States. I want to thank the Congress for bipartisan, bicameral support, and I am looking forward to good meetings with the members of the Congress and their support. This is the visit that I'm here today to meet with the Congress. The main issue during my today's talks is to strengthen Ukraine. Next year, our movement forward to fight for our freedom and independence. I have good news returning home. President Biden announced a new package of